is expected to slip into its worst recession since independence. The Trade and Industry Ministry has downgraded full-year contraction to between 4 and 7% from the earlier forecast of 1 to 4%. Analysts say unemployment is likely to rise as the brunt of the economic impact will be felt. Michelle Teo explains.
A further deterioration in external demand and the expected economic impact from the circuit breaker measures have pushed Singapore to warn of a deeper recession for the full year. Singapore's economy shrank 0.7% in the first quarter due to declines partly from wholesale and retail trade, air transport and accommodation. These segments were affected due to COVID-19.
There continues to be a significant degree of uncertainty over the length and severity of the COVID-19 outbreak, as well as the trajectory of the economic recovery, both globally and domestically.
Analysts say the brunt of the economic impact will be felt in the second and third quarter due to regional lockdowns and movement restrictions, and the ministry warns that subsequent waves of infections in major economies such as the US and Eurozone may further disrupt global economic activity.
The key for us here is to what extent does weaker consumer demand in US and Europe really impact Asian export. Probably in the coming months, that's when you'll really start to see the decline in investment really start to weigh on export volumes for Asia as a whole.
To ease on the impact, the government has rolled out 4 separate stimulus packages to support the economy. In its latest Fortitude budget, additional support was given to businesses and workers. The job support scheme, which supports firms in retaining and paying their workers, was enhanced. But even then, economists still say higher unemployment levels are expected in the near term.
There will be many workers who will lose their job, not because of retrenchment, but rather because companies will go belly up. I think many companies, especially smaller companies or those with weaker financial standings and facing some cash flow problems, I think those companies may not survive this crisis. And as a result, they would have to let go workers. I think the government will also respond, very strongly in terms of helping policy measures to help all these workers who lost their jobs.
Even as circuit breaker lifts, economists say that the pace of a recovery will be mixed across sectors. A manufacturing-led rebound can be expected towards the end of the year, supported by growth in biomedical exports. But those in the services industries could take up to next year to resume post-COVID economic activity levels.
Services cluster will continue to face significant drag coming from tourism, aviation, retail and F&B. These industries, even though some of them, in fact, most of them will not benefit from even with the lifting of the circuit breaker. Now, construction industry, towards the end of the year, we should start to see some improvement. But having said that, I think any improvement will also be very modest, because I do foresee that there will be precautionary measures that will be put in place at work site, and this would definitely hamper the overall productivity of that industry.
The experts say another factor that will influence the pace of Singapore's recovery will also be on its ability to contain its domestic outbreak.